More earnings into month, and the quote unquote pain trade is the discussion this week as we look at another edition of our weekly markets and profile from the team here at TRADEWITHPROFILE.com. This is part of our profile development pathway for active traders looking to enhance their skill in an intraday directional futures. My name is Josh, founder of Trade Profile, one of our lead coaches, also an active trader myself. And this is kind of where we start each week, is to have a plan, step back, see where we are from a macro perspective. So even if you're active in an intraday space, it's really important to have a larger perspective so that you stay grounded in what's going on, because markets go through cycles and there are different inputs. And so what we're going to attempt to do here is look at where are the bigger prices that we need to be paying attention to. What are the macro ideas that are driving things so that we could know when those might change and adjust accordingly? That does impact what happens on an intraday basis. So with that, let's actually start by talking about kind of a macro perspective. And we're going to look at macro in a couple different ways, and not like in an attempt to really change what you're looking at, but just to get, some degree of insight. Okay, we're going to start here by looking at a tool called the VIX curve. And this allows us to look at what's happening in terms of market participant positioning. All right, so a couple different ways that we look at positioning. One is through inventory in the auction. We can see that through the profile. We can also see when are we likely to go after certain profile references when we see how participants are, bearish or bullish. And this is a way to measure that. So this isn't an indicator like an oscillator or other technical indicator. This is a behavioral indicator, because this is measuring how much people are paying for premium. And here's the core principle for you to understand around this, is that markets rally when everyone is bearish, and they fall when everybody is complacent. And there's a chain or feedback loop that's in play between the products that investors buy and the dealers who sell them that is represented in the VIX. And the VIX is a 30-day risk instrument for the S&P 500, where most all of the equity risk in the world is hedged. And we can see that when people are basically paying up for protection against lower prices, that becomes the break on the markets. Why is that? Because if I start paying more and more and more premium, we're not going to go a lot of it, but more extrinsic value in my options, there's somebody on the other side that's selling that, and they're hedging that. Well, once I get past a window of not needing those, then whoever hedges those buys those back. And so last Friday, for example, we had OPEX. Coming into OPEX, where are we, and how could we, have a potential understanding and expectation that we would see the market move higher? And that's seen here in the VIX curve. First, we're in a spot, and have been for quite some time. We've been kind of putting in a bottom, similarly to what we did in the quarterly OPEX back in June. But essentially what we've been doing, this started at quarterly OPEX in September. But what we've been doing is we've been building and retesting lows around the larger inflation narrative, which continues to drive markets. And then participants are going into short-dated options for protection. The reason for that is if you want to hedge your portfolio, the cheapest way to do that is to buy some type of put that's going to get you through the event that you're scared of. But once that event's gone, then you either roll that out to a future expiration, or you cover and get out. You basically I got what I needed. And if you go buy longer dated puts, because you can buy puts for protection way out in the future, but because those puts price in so many of the adverse events that can happen, you're not going to get much movement out of them. But one that's going to get you through whatever the event is. And this last case, we had an inflation report a couple weeks ago. Once we got through that, that really opened the door for us to move higher, and has been what we've been talking about as a team around a VIX reversion. Okay, and a VIX reversion is where we're essentially burning off. So we're not having new put buyers coming in, and instead we're burning off those puts, which is forcing dealers to buy back inventory and taking us toward prior inventory nodes that we can see in the profile. Okay, because that's all a volume profile is. It's just showing us where has there been prior inventory, and that's like other time frame long-term inventory shows up there, right? So we can see where the significant references are, kind of 3,900, 4,150, 3,750 are in play as we move higher. Now we're back above the prior low for 2022. We did go and the 2022 low is here. The 2020 pre-COVID high is here. So, those are all prices to carry forward. I do think ultimately we're still going to see those, but in this, we don't go all in a straight line. When everybody's concerned that we're going to fall out of bed, that's a place that we can reverse. And so we're in reversion right now towards a couple key dates. So we go into November, we've got the next FOMC meeting. We also have the next CPI report. So the expectation is that we're going to go towards those, and then we'll start seeing, as we get back in here, we'll start seeing investors starting to hedge up again as we go into those events, as that's what's driving the narrative. And then that will stall the auction and potentially try to take us back lower into those events. However, if we go all the way up and we're very complacent leading into those events, then expect that we're underpriced on our risk, and then the door will slam pretty hard. Okay, so we just kind of have to see how that plays out, and we'll continue to watch that, from a macro perspective day to day. Now, the other thing that's kind of happening in a macro perspective that is driving a lot is the strength of the US dollar relative to other currencies. And you can see here, this is over a 1-year basis, but let's just go back over like the last 5 years. And you can see how significantly since 2021, there's been a move higher in the US dollar relative to all the other currencies. So we've got the Canadian dollar, the pound, the euro, Aussie dollar, the yen, the Swiss franc are all at discount to the US dollar. Now, what does that mean for us as we're looking at markets in terms of, is there going to be steadiness going forward? Are we going to get to a low vol perspective that we've enjoyed for the last 15 years? Most likely not, because this strength means that these other central banks are going to have to do stuff, which can increase. One of the things that's in their toolkit is for them to raise their interest rates. Another thing that could be in play is that the Fed pauses. We talked about this in terms of a pivot that could be in play. We'll look at that, especially on the calendar. We've got Janet Yellen speaking this week, so we'll watch that as well. That will be something that people will be looking for. But these are some of the macro things that are in play. And just know that, the ebbs and flows of how this goes, a place that you can get trapped. Not only can you get trapped if you're way low on the inventory, but also if you're below composite inventory, so where all your value references are higher and you're super bearish here, that's a great place to get stuck holding the bag. So don't do that. If you want to be short, thinking that you go for new lows or retest of that 2020 pre-COVID high, we want to see and get to a spot where this curve is complacent. That's going to be the best trade location for a durational trade as that tightens back up and takes us back lower. It's a little bit like physics. I mean, it really is that when we're uber fearful, those are the spots where once we burn off that fear, we go higher, right? Burn off the fear, go higher. Get more fearful, what happens? Market goes lower. This is the feedback loop that's in play. It's a key thing for you to understand if you're going to be in the space. Okay, so those are a couple macro things that we're paying attention to. Next thing is just to look at the calendar and see what potential catalysts that we have out in play. And we got two things that are going on right now. We've got both economic events and we also have earnings. Okay, so let's look at the calendar this week and see what potential catalysts to pay attention to. So here's Yellen's going to be speaking on Monday. Now, a thing to be careful of and be in mind about whatever she says on Monday is we got midterm elections coming up. The Democrats want to put on a good face, even though the economy is struggling. Expect Yellen to say something that is trying to boost the markets. We're already looking to be higher just because we're burning off puts anyway. It's not going to really change that. So that's going to be in play. We've got some Fed speak on Tuesday, a 2-year note auction. We've got some Chinese releases coming up. Not super impactful to what we're doing day to day, but definitely be mindful if you're trading on an intraday basis. Any type of event like this that's planned, the auction will likely slow and balance into that release. And then whatever she says or whatever the Fed's, what Waller says on Tuesday, that'll come out. And then there'll be initial period of volatility, set a range, and then you can express off of that. Wednesday, we have new home sales. This is right at the turn of B period. So definitely, watch if you're trading early on Wednesday. It could go either way. We got typical crude oil inventories on Wednesday. Thursday, we've got GDP. in pre-market. That's one of the things that's in question is, are we in a recession? When will we be in a recession? When will we start to get an initial reading showing that we're in recession? We're not seeing that yet in the data. And then on Friday, we have an inflation-related release in the core PCE. Whole cluster of these all happening right before the open. And then we have Michigan consumer expectations, again, kind of tied to inflation, that macro narrative that's going to be there right at the turn of B period. Now, and that's basically gets us to the end of the month. On top of that, we also have earnings, and we have big tech earnings in play. Nothing on Wednesday, but Tuesday, we have Google after the close. So that's one. Wednesday, we have Microsoft and Facebook after the close. That's two. Thursday, we have Apple and Amazon after the close. Those are going to be, big drivers for the auction this week. So on top of what's happening from, whether Yellen speaking, what happens with those big companies in play is that we're going to be, largely trading some early volatility in the market, some good movement, and then we'll likely balance waiting for those earnings reports. There'll be some movement after the market, and then we'll have to kind of see where we are the next day. Okay, so this is going to be a pretty, we're ultimately going to get to destinations. It's not going to go in a straight line this week, I think is the key takeaway. So be prepared to be nimble and go either way, especially for those of you, looking to express intraday. I think the cleanest price action is going to be early in the session, with the exception of some of those intraday releases. Be mindful of those, and then it'll just die off as we get into the afternoon in those pending earnings. Okay, so that's perspective. That gets us through this week, and then next week we've got the non-farm payrolls and also FOMC to look for as kind of the next things, and then the week after that you got CPI. So still lots of fun and active stuff coming up in 2022. Okay, so with that, giving us kind of some calendar, let's talk about some specific products, shall we? And I want to start here by looking at the S&P futures, and I've actually got the spiders, the SPY, which I don't know if you knew this, but the ES contract is a hedge relative to the SPY ETF. So that's kind of the underlying product that ES is against. So it's good every once in a while to look at that. Sometimes the references can be a little on, a little off, but what we're seeing here is we're seeing 3,900 ES, also equating to around 393 SPY as kind of a next reference up, and then 415 SPY, which is also like that 4150 ES. We've got to the downside kind of 367, so 3680, 3690 ES, and then down here, these are the references. So that 2020 pre-COVID high, as well as a significant high volume node that came out of a range that was developed that ultimately resolved past the election. So don't be surprised to see us back at those prices at the midterms. Okay, so that could be in play. That also is in keeping with what's happening in terms of kind of some macro projections around earnings growth and so forth. So we do have a really nice low for the moment. So this came off of that CPI, and again, this is just looking at the RTH data, but we had a really nice low here off of that CPI that got us back above a good node. So Move is expecting us to actually get up towards 390, 395. SPY again 3,900, 3,950 ES, pretty clear so long as we continue to hold above that node, and this is good excess that should get us higher. So keep that in mind. As far as the specific ES itself, again, we're starting here looking at the monthly profile and seeing where we are. Okay, we're back almost to the high of the October profile. You can see 3690 is going to be our key pivot that we're looking for this week. To the upside for the week, we've got a weekly expected high up here at 38.30 or 38.33. We've got the 90-day VPOC at 38.75 now. That's adjusted. I think those are all within reach, especially getting up here with the weekly expected high. Looking for us to challenge this. Very strong move higher on OPEX with pretty good RVOL as well. So we're looking for that to continue higher. Definitely the path of least resistance looks to the upside. You can see here on the weekly profile how that has really I mean, really big move, really big move in a short period of time, off of good volume. The auction, started below the 5-day and 20-day composite profiles. So we had balance here. Let me change the color here. We had balance here. It came back quickly and then pushed all the way through this selling excess and to new weekly highs. That's what we call a poor high. We do have 3,800 as an initial easy target. That's a prior naked weekly VPOC, expecting that to be hit. That may be hit as early as the reopen on Globex. Don't be surprised to see a gap open this week, given the fact that the auction wasn't shut off by activity, it was shut off by time. So again, weekly expected high gets us up here in the 38, 33s. I think there's a potential that we could push it, given into the week, month end up to 38.60. So, don't be surprised there. The question will always be, at what point do we get to those prices? So as far as the plan goes, we've got now a period of strength here that starts from 3,700, let's call it. Okay. So early in the week, if we see prices come into this early, okay, we've got 37.35 high volume node. We've got that 3,700. This is the key defense, but anything early, we'd consider that responsive activity and then look for buyers to push. And then if they take those highs out again, 3,800, 3,844 up to the 90-day would be the expectation. If we go higher first, it depends at how high we go and then when we come back into the range. Do we come back in on Monday or Tuesday? We could then revert back out. Or do we come back, push higher and gap higher? And this would be what we call the pain trade that we're talking about, is that we just keep pushing right up here early in the week and get up to this price, where we're above our weekly expected high, let's say Wednesday, Thursday. And then if we come back later, then that would set the expectation for us to come back to this price later in the week. So, timing, not just what prices are most important in the auction, but when do we get there is always a key insight to think about. So for me, any early wiggles lower are opportunities to be long. That's a definite want to hit that. Wouldn't even consider being short unless I had first tagged this prior naked weekly VPOC and then got back inside the prior range. If I can get back inside the prior range, just looking here at the intraday profiles, you can see we've got a really imbalanced. We've got some singles here. We have a volume profile on 2 TPOs. That's how thin it was. You can see the volume profile here, the market profile graphic. The TPO or TPOC is way down here, but VPOC is higher. Always volume is more important than time. Okay. Really fascinating action last week in the fact that we had a outside down day followed, which should expect lower prices. We got those. Actually cleaned up singles back here from the prior Thursday or from prior Friday, and then had an outside day up. That's a pretty strong rejection of lower prices. So high conviction for higher prices. And what's the key price that buyers have to keep defending? It's your 5-day. Okay. So, what's that going to look like from, specific references in terms of what our posture is? Just looking at my intraday trade plan here. For Monday, I've got a pretty bullish posture. So prices above the 5-day equal to the 20-day. I've got that 90-day is above me. For the week, looking for about 100 points again, still looking about 45 points per day, and about 42 points in the first hour. So we're doing a lot of business early in the session. Look how that is relative to what we're doing for the full expected range. Had a little bit of implied volatility come down, but still lots of stuff to do. Still, most traded prices for the year are way above us. So that's kind of that would be if we get to that 4150, 4155 area as we go along. So that's what we're looking for in the ES. Again, early prices lower on Monday are opportunities. So if we're inside of range, look for them to try to test lower and press and go towards 3,800. If we open above, gap rules are in play. They could keep drifting on to the next decision levels higher. If we fail, it's going to be back to this most traded price, and then likely going to clean up these singles and find a bottom here before rotating back. If we get below 50%, then we could see significant retrace. Not expecting that, but that's why we have a plan to know where that is. Okay, so that takes care we're looking for in the ES. Let's now jump over here and look at the NASDAQ and get a similar perspective of what's going on in the Qs. Again, not going to be markedly different. However, they're not as high on the monthly profile. Okay, very strong push, kind of a follow-on from that CPI. So here's that CPI range from last week. We came down, tested the top of that, ramped back through value. Here's where you can see that posture. Price is above the 5-day, which is equal to the 20-day. So that's our key defense. We're looking for the auction to push higher. I think 11,600 is a pretty good target higher for the week. Weekly expected high, 750-ish, let's call it. That would get us closer to the top of the month. And then above that, kind of the next key area is going to be right up here. And this is a prior CPI range as well. Okay, so looking good. Was on elevated volume, not crazy high volume, not like what we had off the CPI reading, but definitely a follow-on. 11,200, 11,100 are going to be very, very key for that auction as we go higher, but giving us good spots to defend. Looking just at the weekly chart, you can kind of see the VWAP bands. We're above monthly VWAP now, kind of pressing. This is kind of where I'd expect the auction to try to start pushing this way and see if we can't get up into here. Again, that's all within the weekly expected range. We do have a prior naked VPOC for the week that's up here around the 640 area. That's going to be my key reference. That's the one that's relative to what's happening in the ES. Did not stop because of activity, but by time. So expecting higher prices initially on the open. How high and whether we gap open, we'll just have to see. If we open in range, as long as we're, any early pullbacks, look for buyers to, get new highs and push this way. If we open above range, gap rules are in play, gaps hold, they're just going to push towards decision levels higher. Gap fails, it'll be here and then here. Okay, nothing to be concerned about for the bulls unless we're below 11,100. Right? What does that look like on a TPO basis? If we're looking at the TPO charts there, we want to see a number of holes here in the profile. You can also see the volume profile at the top. So imbalanced auction, this is also what's informing the expectation of higher prices. That 11,500 is key. Actually, if we pull back here, here's where you can see, some of those naked references that we're looking for. So we've got a weekly naked VPOC that's up here at 640. We've got a daily VPOC right here around 573. And kind of a hole in the profile that, if we could go up and test this hole and then push out, but if we hold the gap or get above that, then you're going to look for this area as kind of a key reference higher, even coming into Monday. Okay, so definitely looking for follow-on imbalance profile to the upside. Should we open in range, any early lower opportunity, that'd be a day after trend opportunity to be long for the VPOC and toward those references higher. So pretty cool opportunities, I think, in the NASDAQ. Sometimes the easiest trade is the day after a trend. So if you see, crazy activity, the easiest day is that. Bullish posture also in the NASDAQ. I'm still looking about 250 points per day, 150 points in the first hour, guys, the first hour. So for those of you who are trying to express stuff in the first hour, if you're not thinking about 150 points, that's a lot of opportunity. So be thinking about that. If you're looking, especially if you're doing like an opening range breakout, if you're playing off that first 30-second range, or you're looking at a directional open go with, be thinking in your head, have I hit 150 points yet or not? Where am I relative to those references? I think is important. Okay, so next with that, we're going to get back over here and talk about the Russell and get an idea of what's happening in a product that's not quite as correlated as the NASDAQ and the ES is, and gives us a different way to pay attention to what's in play. And just loading some data here real quick. All right, where are we? So we have a poor low for the month We are above the 90-day VPOC. We're above the 5-day here. We have a poor high. So we're definitely very much in a bracketed trade. When the auction holds above value references like this, what would you expect? You'd expect it to test up to here. So, this week we're looking for, a push off of this buying excess to test that prior monthly highs. And you can see there's a prior naked monthly VPOC way up here, right around 1800. So that's kind of our key upside objective this week. So long as we continue to hold kind of the 1750 area, we can certainly chop between here. If we accept below 1711, then that puts these prior excess spots in play. But we are so far leaning on an expectation that we're going to be able to continue to hold above, the last CPI reading that came in. And that's, some of those key references. How did the rest of the week play out? Pretty cool thing to think about here. And this is why we look at kind of what's the most traded price for the prior week. Because, get our decision levels on here. Last week, we had 1698 right here as the prior weekly VPOC. What was the low before OPEX on Friday? To the tick, gang. We got that, bought that. That not only should that slow the auction, but that should provide, especially depending on how you came into it. We were responsive, looking to make new weekly lows, and then boom, right back to the then most traded price of this last week. So that now is what we're carrying forward. 1743's key price, as long as we hold that, looking for new weekly highs up toward that 1800 references that we're looking for that would test the monthly high and that prior monthly VPOC that's up there. Okay. Could see some early balance in the Russell before they attempt to push higher and try to break gravity. As long as we hold this price, we're looking for a push up here. If we accept in here, it's going to be a little bit more murky. So be mindful of that. As far as looking at the actual TPO charts, we've got a couple key references. We do have a naked VPOC up here at 1759. That's my target higher on Monday. So, as long as we're above the VPOC from Friday, or TPOC and VPOC, which is, again, also imbalanced to the upside, we're looking for that 1759 up to 1770 could easily be in play. You can see our daily expected high is up here. If we open in range, anything below look to be long here, and then new RTH highs. If we're above range, wouldn't consider anything short back to prior value unless I tagged this reference. If I trade above 1770, I could look for some balance, as I may start to encourage, given the fact that I'm away from some composite value, needing to balance. But I think we could actually go all the way up here before we would need to balance. So watch for continuation on the strength. Again, below 1726, and they can flip the script. All right, so we'll just bear that in mind, but not expecting to be below 50% of any of the equities going into the beginning of the week. We're looking for those to hold. As far as key references expected, still looking for about 36 points per day, 27 points in the first hour. We are at a more balanced posture, so that's also informing why I'm looking for something more choppy in the Russell, even though if they can get above the 5-day. So above 1740, holding that, then we change posture, more bullish, and we want to defend 1740 going higher towards 1800 for the week. Okay, that gives us some pretty good ideas to look for there. Now let's jump over to our last product that we look for opportunities for every day, and that is crude oil. And crude oil has just been we haven't been spending as much time trading crude on an intraday basis for a couple reasons. One, some of the early volatility that was in play out of the Ukraine conflict has subsided. We're also not in a high demand energy time of year like we were in the summer and in the early spring. So that can impact some of that as well. And where are we on a monthly basis? We're pretty balanced. In fact, we see that on the posture and the plan. We are in a balanced posture. So price is equal to the 5-day, equal to the 20-day. That means we're primed for a move. Look at the references that were around, and what we're trying to do. Last week, we got up to that 88 reference, and then came off of it to close the week. Expected lower prices towards 83.50 was kind of our key downside reference. We got that this week, and then you can see we had a series of higher lows, but really you see some taper in the profile. What does that mean? When you see a taper in the profile after you've been down there and coming back to establish value, the auction has been unable to facilitate trade down there. That then suggests that we're likely to keep moving higher. Now we do have some selling excess and a poor high to go attack, but as long as we hold kind of 84.90, we're looking for at least 86.35. Now this could chop above 86.35. We'll go for those new highs on up to 88 is kind of the key idea. If 83.15 comes first, we might have to be a little more nimble to that. That could open the door for us to push back towards that prior monthly close. Okay, so be mindful of that. But so long as we kind of hold the 83.50 area, we're looking for crude to push towards 88.50 this week. Could be as early as Monday, just given what the ranges are. All right, so it's a good one to just know from the quick sheet what's going on. So looking for, you can still see $11. It's remarkable. Still $4 range, guys. Remember when we were doing $1 or 95 cents per day. So still really good ranges, good opportunities there. We are in the December contract. So if you're looking to express, be looking to do it that way. Okay. Now that covers kind of our core products. Next, I want to go look at some other ideas that we can express from both the quick sheet as well as, just really from the quick sheet itself. So to do that, what I want to do is I want to jump over and I've got a little log here that we're going to start tracking week by week, just so we can kind of check on how some of these ideas are in play. And I want to look. These are some of the ideas I want to talk about that are coming from the quick sheet that are going to be kind of on my radar on the week ahead. So let's just dive in through these, shall we? And we'll kind of update these week to week and whether we did anything with them or not. Let's start by looking at Bitcoin. And Bitcoin is very balanced and has a poor low. This 20K node has been in play for quite some time. I am looking for there to be some type of capitulation low in Bitcoin where we try to test into this low volume node and then come back to 20K and then put us in pole position for at least 30K in the bottom of this larger bracket. If we can get above 30K, then I think we can start thinking about 38.50, 47.50, and so forth. Okay, but as far as an idea that I'm looking for a low, re-enter 20K, holding for 30K, and would defend the low. All right, so right now, that one is just totally in play, and I've got nothing to do until we get up to those prices. Okay, so that's the first one. The next one is because while the NASDAQ and the Qs are bullish from a 5-day, 20 perspective, but from a 20-day, 90-day perspective, we're less balanced, or we're more balancing. So let's just look at the triple Qs here, and we've got a nice excess low down here. We've got some high volume nodes, so we're looking for this product to really kind of balance between here, before it would try to move lower. That gives us an opportunity. That plus the fact that we've got some earnings that's going to cause us to have some difficulty with direction is an opportunity to do a strangular iron condor. So looking for some form of or fashion of that over the next couple of days. You can do that in the NQ. You can do that in the micro NASDAQ. You can do that in the triple Qs. All basically expressing that on kind of the same idea. Okay, so that's in play. Now, Apple, Google, Microsoft, and Coinbase. All of these, kind of the key idea here is what I would call a double diagonal. And I just want to walk through one of them. I'm not going to do all of them, but let's just talk about Apple here real quick. We know we've got earnings coming up. We've got, this 153 is kind of a key node here. But basically what we're looking to do is we're going to look to sell the earnings vol. So we've got earnings on Tuesday or Wednesday. So we're essentially going to go and sell, do 8 strikes here. So let's say we'll sell the 148. We'll sell the that one, and then that one. Okay, so we're going to sell that 8 days out, and then we're going to go 12 days out, and we're going to buy it. So I'm not going to put this on until earnings day. But if we analyze this, so this is going to cost us, if you do a one lot, it's going to cost you about $200. But analyzing this, if we close not this Friday, but next Friday, up around 147. I'm sorry, that's actually at this Friday. So this Friday, so if we're around 150, 157, that will net us $500 on a $200 investment. So why are we looking to do this? We're looking to do this because going into earnings, implied volatility expands, and they're pricing in what the range will be. Okay, you can see here on the probability analysis that like getting out to the end of the week, we're really just looking for Apple to be above 155 to 140. That's what's priced in right now. So if it can't escape that, then that's already priced into what's happening in the options premium. You can see here at 155 to 140. If we're between that, you're basically selling a straddle and then buying a straddle behind you. Buying the straddle protects you from the black swan movement, but if we stay inside that, you can capture that. So this is kind of the idea that I have for all of Apple, Google, Microsoft, and Coinbase all having some earnings in play and coming up. So those are ones I'll be watching, and we'll update those coming into the next week. And then one other idea that I have out here is copper. And I'm just looking at this balance. We're in a balanced range here. Copper's getting ready to make a move. Now, it has a fairly high implied volatility range, so I'm not really going to buy options. I'm not going to get paid very well on those. But what I'm going to do is look to do either the micro contracts or the mini contracts and be long up to the top. And really, this is the key node right here at 350. So looking for 350 to 370. If I can break the top of this, I could even run. But given the the long push lower, now we've come up, shut off, established a range. We're at the middle of balance. We're looking for a push to the top here. We would defend the low here. Otherwise, we're going to go and retest these lows and could be on a path down there. So right now, we're looking for a move from balance, looking for that move to be higher. I'm going to do that in contracts. I'll be monitoring that. Saw the big move higher to close the week there. So some good strength there. Want to lean into that. Would likely be into that on Monday or Tuesday, and go from there. So those are a couple ideas that I'm stalking and now have kind of a way to track those, and then we'll update those as they go along, and see how that plays out. All right. So if you have questions about that, feel free to give us a holler, and we'll see. This is express anything that I'm doing outside of intraday stuff. It's all in options. Much safer, much more capital efficient. Can actually do that with some probabilities. So it's a good thing to have in your toolkit as you're looking to express. So those are the ideas in focus. Finally, let's talk about our development focus for this week, and that is talking about equity curves and risk management. Okay. Now, as part of our development pathway, and kind of what our key idea is as a development firm, is to make sure that you understand how markets work and how to understand how the auction plays out, so that you know how to show up around that. That, hey, by the way, you're in an auction process, that we are using the profile to see the inventory of all participants on all time frames, so we can make better decisions, so that we understand the impact of catalysts and stuff like that. But the actual expression of the trade, that's where we look at 4-question and playbook trades. And then, as you understand how the auction goes, you're eventually rolling that into your playbook, and you have to kind of track your performance to know if your equity curve is up and to the right. So one of the ways that I've been demonstrating this is through a funded tryout. I know a lot of guys are really interested, especially in an intraday futures basis, in doing a funded tryout. Doing this with our friends at Apteros, and I've been doing this just to demonstrate that, hey, I know how to do this with a couple key criteria, and the criteria are that we have a daily drawdown of a max of $1,500. And then we have a total account drawdown of 4K, and we're looking for an account appreciation from 50K to 60K. Okay, so I started the account. I think the first day I lost like $1,400 because I was using a execution platform I didn't know. Been slowly catching my stuff and getting back. And here's the here's the current perspective of the track record. And you can kind of see that as I track this, just kind of from a daily basis. Even this last week, I had a pretty large negative day, not excited about, as well as some others, and the gradings on those. All that rolls up into an equity curve. And so this is what this looks like plotted. Okay. And it's important to know, as you're going along, as you're expressing playbook, ultimately your equity curve should be stable up and to the right. It should not have these wild swings. Okay. So, I threw this out on Twitter asking for people like, what are some things that you would do differently given, what's happened, in my curve. And I love that my buddy Jed, who's part of our development team, gave some insight on ways to manage an equity curve, right? So like looking at that curve and then changing and having dynamic drawdowns, levels to know, hey, am I in the flow with the auction or not? And it's very important. It's very important for you to know when you're in the flow with the auction and when you're not, because sometimes you will be. Even if you have a developed playbook and you're consistently profitable, there are times when you're in the flow with the market and there are times when you're not. And knowing when you're not is crucial to be able to get back. Make sure that you're looking for really good setups, A+ conditions. And in a setup in an A+ trade there's an equation to it. The equation is that I have a narrative. Okay, so I have a narrative expectation. So that's where do you believe the auction is going to go? What are the kind of driving things in play? Okay, great. Then I'm expressing that in a playbook setup. For me, every playbook setup is a 4-question trade. And then I'm going to fight for price to get good entry. And then all of that in one chain, if I get in, is one good trade, rinse and repeat. Okay, well, there are times when my assessment of the narrative is off. There's times when I didn't wait for all the criteria for my playbook trade. There are times when I didn't fight for price well and I was sloppy on my entry. That can all impact the result. And there's also what we call the Hercules phenomenon or syndrome, where especially if you've had success over a period of time, you will, and this is a measured human behavior, you will start to take on more risk and believe yourself more invincible. So a good clue is anytime you've had good success is to always go, okay, where's the demon in the corner that is gonna come get me? So being able to assess your equity curve can be really insightful. For me, just looking at that curve and taking this insight from Jed, a couple key things that I'm going to do, given the fact that my average daily win right now is somewhere around $450. Okay, so one, I'm not, even though I could go down to $1,500, why do that? I'm going to set my self-imposed daily loss at about $500. That way I know that if I hit $500, okay, I'm done for the day. And then I'm going to pause and make sure it's better that I'm probably out of flow with the auction. So anytime that I've had a losing day, that's typically indicative of I'm out of flow with the auction. So get away, reassess, come back the next day. I'm at a better chance of being flow, and I'm not giving back a week of work, right? So if you have a $1,500 drawdown and you have an average of $500 a day, well, one day takes back 3 days of work, right? Don't do that. Let's keep them in a tighter space. So know your equity curve, all right? And to that end, it can be really insightful, even for key professionals. I threw this out on Twitter. This is the equity curve. Well, basically, this is the chart of the ARK Innovation Fund from Kathy Wood, who was everyone's all-star fund manager last year. She had done 300% return in the fund. Okay, what's that fund look like now? Is this good risk management? Where should Kathy have adjusted her perspective on what was going on? And people could say, well, people tried to go after her because she was a woman or stuff like that. It all comes down. It all comes down to risk management. So as a trader, we can't leave our performance up to someone else. We have, we have to own that. Okay. So as you're looking at your equity curve and making assessments, and let's assume that it's actually a curve that's up and right. The first question is, what is the slope of that curve? If that curve is sideways and not making any progress, that's a good clue that you likely don't have a solid playbook yet, or you're not executing well in the playbook. Okay. Next, do I know my average win? What is that? Like in dollars? Like, especially if you're doing one of these funded tryouts where it's nominal, not points, but like, what's my average win? How much will drawdown will I allow relative to that? That can be set relative to that average win. I wouldn't let it be more than 2 of that average win. Ideally, it's the same as an average win. What assessments can I make from reviewing my curve? If it's flat, or it looks like a washboard up and down, that can be indicative that, yeah, I don't have a good playbook, or I'm not waiting enough. I'm too active. Or if you have good solid curves and then you see these big pull, drop downs, what is that saying? That's saying that, hey, I'm not doing a good job of managing my risk when I'm out of flow with the auction. I need to adjust that. What are rules in place should my curve start to fail, and how would I know what those are? Okay, are key insights. So good things to think about relative to your equity curve and risk management as you're learning how the auction works. Ultimately, that's got to roll up into the trade, right? So we're taking the foundations of what we're learning in the profile and in the pathway and rolling that into ultimate performance to get us to where we have good, consistent equity curves. That's where we want to be, right? And that's what that ultimate dollar amount is going to be different for every person. And what your equity curve looks like is going to be unique to you. However, there's good, solid principles that are applicable to anyone looking to express markets. And if you find you have an equity curve that is like this, that's a good clue that you need to do some work on your risk management and your trade selection. Okay, so hope that helps. Another way that you can be better is to be a 4-question trader. So if you find that you're looking at your equity curve that it is just up and down and your playbook isn't really set, or you're not waiting for good ideas, use the 4 questions. What's the opportunity? What's the target price? What am I looking to risk relative to that? How will I know that I'm right? How will I know that I'm wrong? Can be really helpful. Other ways to build skill this week, aside from understanding the 4 questions and interacting with us on Twitter, feel free to schedule insight sessions. It's tied to the link on this video. Those are set aside times that we have each week for traders to be able to get an audit of their approach. You could even look at your equity curve, get some insights there. If you want to look at more structured development, you can do that via a trial of our pathway. Or if you want to do a funded tryout with development, we have our Pathway Pro, which allows you to pair development and funded tryout at the same time. Doing that with Apteros, great fun. Software that we're looking at that you've seen on this video is from EdgeClear and WindowTrader, 2 great firms aligned for your success. We're not compensated to say that. They're just good friends. And then finally, for those of you who are part of our pathway, I'll see you on Slack this week and during our weekly development sessions. Get those plans ready. It's going to be a good, fun, and active week. And if you're more interested in some of the option stuff, just a quick reminder that we have a partner firm, meflow.com, that is aligned to teach you how to do these types of strategies so that you can be more active. So with that, thanks everybody. Hope you have a fantastic week. Thanks for the comments and thanks for letting us know how this has been helpful for you. Still lots of active stuff to do here in 2022 and looks like it's going to be a great 23 as well. Mind your risk this week and we'll talk to you soon. Peace.